The one without the stop loss one? Yeah. No. Yeah, and that, see, I forgot. I think it was Sarah that asked me this week, or it might have been your dad, about the why are their stop losses so big? Their stop losses are so big because they're trying to avoid these stop hunts. And normally you would put your stop loss below the previous low or above the previous high, but that's exactly where they're going to stop you out, and that's why you keep getting stopped out. So if you listen to most traders, they say the rule of thumb is like 50-50. If you're going for 10 pips, your stop loss should be 10 pips. Again, the market makers are accounting for all that stuff. So when they do their stop runs, they're going for those 10 pip areas where they know, okay, and they know how people trade. So they know, okay, the 50 just crossed the whatever EMA you're trading. They know all these strategies. So they know exactly where your stop loss is. That's why you're going to notice when you don't use a stop loss, you will have more wins. Period. The problem with that is if you're new, you'll probably have more losses because you're not as aware of the charts yet. You're still not sure when to jump out. We're going to go over some of that today. Hopefully that will help you guys learning when to jump out. But in the beginning, you do have to use a stop loss. I would recommend using their stop loss even though it's big, but I'm going to show you how you can jump out before it hits your stop loss, because remember, their stop losses are pretty big, but I know way ahead of time because I've been taking the trades with you guys. I know way ahead of time it's time to get out of this trade. It doesn't even touch my stop loss because I know that trade is over way before it gets to that stop loss. And so I'm going to show you guys how you can use the 50 and the 13 EMA, or if you're using the MTFA, either one, it's fine as long as you have those two numbers on there. And it'll tell you it's time to get out, and you can always jump back in. When I started trading, I used to just stay in the trade, like, okay, hopefully it'll just come back, it'll just reverse. It's so stupid because that's what I was doing. Yeah, for so yes. By 2 pips, one of them this week. I pulled up. Yeah. While you were in profit. Yeah. I pulled up those certain trades today. I pulled up a couple that lost and a couple that won, but specifically I pulled up certain trades because I wanted to show you guys certain things, and that's one of them. It literally came 2 pips before their TP. So, I mean, I was in that one too, and I saw it starting to come down. I just got out because I already knew the signs that this thing it probably would come back, but much later. And I don't take chances anymore. When I'm in profit like that, there's no reason to risk it. If something is pulling back, you have to always think of it like this. If a trade is pulling back, that means there's going to be an opportunity to jump back in. So why not take your profit? Now, when you jump back in, and this is why, as you become a better trader, this is why traders don't do this. Because when you jump back in, you're not going to get back in at the same spot because of spreads. So you might miss about 5 to 10 pips that you would have had you not jumped out if it goes back in the same direction. But I'm okay with losing those 5-10 pips because what I've noticed is the times that I didn't just jump out, I lost a whole lot more than 5 or 10 pips. If it didn't revert, if it didn't go back in the direction that I thought it was gonna go, and it kept reversing, and maybe it did a full reversal, I lost the whole trade. Yes, exactly. So that's what I always say. Just jump out. You're good. Yeah. And look, yes. And you know, a good way for you guys to know too is if you're looking at your MT4 and let's just say you're at $30 and you'll start to notice like what just look this week. Look at your trade. You're going to notice this a lot. So let's say you're at $30 and you're supposed to maybe get to $50. It's moving, moving, moving. You're at $15, you're at 20, it's going to 25, 30. All of a sudden it hits 30 and it's at 28 and then it's back at 30, and then it's at 28, and then it's at 32, then it's at 28, and this goes on for a good hour. When you see that, get out, because it's either going to reverse or it's consolidating for a long time, and if it's consolidating, you always take that risk that it might reverse. So you might as well just get out of it altogether. And you'll see that. You guys probably have already seen that, right? The jumping up and down, and it's small. So you keep saying yes. You keep saying to yourself, okay, that's only $5 difference. I'm gonna wait. It's not a big deal. But that up and down in the same area, that's signs to get out. Yes. Mhm. You can, David, you can test it. If it was hitting your stop loss, try doing 12 and see if that makes a huge difference. Because remember, like I said, sometimes they have that exact spot that they go for, and sometimes that 1 or 2 pip difference will completely avoid it. Try 12 first because they really go for those even numbers. So sometimes just that 12 you'll avoid it. Yeah, try it. No, we're gonna go over that now so that you guys can at least get that. Sarah, really quickly, if you do want to focus on the higher time frame for that strategy, tip for you can all use this. If the candle matches, if the current candle, when you go to the chart, the higher time frame, I won't look at the 4 hour, look at the 3 hour. You're not gonna hear anyone tell you that besides Lorenzo. Go to the 3 hour chart. If that candle is facing the same way as the 15-minute candle chart, you're good. That money strategy, you're going to be good with it. Mhm. They should be facing the same way. If they're not, or you see that the candle is really tiny on that 3 hour and it looks like it's about to turn into maybe the opposite candle, then stay away. That's not a good trade. That's a good. No, that's for the longer time frames. Because you said you were looking at the higher time frames. So if you want to continue to look at the higher time frames, I would look at the 3 hour instead of the 4 hour, and always double check it with the 15 minute. Make sure it's going the same way. Mm-hmm. The 5 minute. Mm-hmm. Yes. Do you enter on the 5 minute, David? Mm-hmm. The oscillator. Yeah, this one. We're gonna go over that right now. That's that's gonna be a big part of you guys jumping out of these trades when they're not working. That's how I'm easily able to jump out because it automatically tells me immediately that it's not working. Get out of it. And usually I'm in profit, so I'm good. I don't mind jumping out. Okay, let's jump in because I know some of you have the kids and hold on. Okay, so like I said, I pulled up just like five, I think here, 5 or 4, something like that. So this one was a loss. It never did actually make it to that TP. So they called it right here where this yellow line is. Now they called it on the 4 hour chart. They called this as a sell. So I want you to see what it looks like on the 4 hour chart. Hold on, I'm gonna move that. These lines are my days. You guys should put this on your charts. I'm gonna take it off right now because it makes it look confusing. But it'll separate the days for you, and this will help you start to see patterns in the market. If you can see, when the day started, what that pair does at the beginning of every day, that kind of thing. Okay, so the 4 hour, they called a sell right here at this candle. So this is what they were looking at. So you're probably going to look at this and say, okay, why in the world would they call a sell when this is clearly buying? So I don't know which trader called it. They all have their own strategies and techniques, but they clearly saw that right here, this was going to reverse because this is where they said to enter at this point right here. Now I'm seeing a lot of wicks right here. So this is exhaustion. So yeah, they were seeing a reversal happening right here. I'm going to go down to the 15-minute because this is where I'm always jumping in. I either jump in on the 15 or the 5, sometimes the 1, but it really depends. So this is, I'm going back on the 15 just so you guys can see something. This is what they were looking at because again, you're probably saying, why in the world do they call this? This is what they were looking at. It kept stopping and reversing. So they expected it to do the same thing right here, stop and drop. It didn't. They expected this move to happen. This is why they gave these two TPs. And instead it broke. If you notice, if a lot of you took the euro trades this week, almost all the euro trades did this. They all broke out of zones this week. So a lot of the trades that were called for the euro pairs were, they were supposed to do exactly what they were supposed to do, go to the next low or the next high. And instead, a lot of them broke previous highs and lows that they hadn't broken in a very long time. So that's what happened here. So why wouldn't I have gotten this trade? Hold on. I'm going to make it bigger so you guys can see. Okay. So this is where they were saying to get in. So you see it's going, now you're coming down to the 15 from the 4 hour because you really want to see what it's doing. I have my 50 and this is my 13. So I'm waiting for, like I always told you, I need to see not only the breakout from where they're saying to enter because this is their entry, I need to see the retest. And it did. It came back and it retest. But what's my problem right here is this 50. This is why I like to keep my 50 two different colors. My 50 is still showing me a buy because you see I match it with my buy candles. So it's still a buy. This is not going in the right direction for me. It's not aligning right. So it does go back and it does retest and it starts to come back right here. My line is still white. My line is still white this whole time. So finally, my line gets red right here. Now, what is the problem? I want you guys to look down at the oscillator. If you guys watch that training, I told you I like to jump in on the first and second candle, the first and second bar. The third bar, you're pushing it because this thing usually only goes but so many bars, usually 4 to 5 bars. Sometimes it'll go extended on a really like quick downtrend, but it's very rare. So if you jump in on the third bar, that thing is almost over. So you're almost hitting a point of reversal. So look, that's when my line turned red. So I would have been getting in on the third bar. If you can see, it matches. I'm not getting in there. So a lot of you jumped in this trade. I never even got in because I saw this. So using this indicator right here, this will save you so many times from jumping in trades that they're just not ready. I do think that this thing is going to reverse because you see right here, it's consolidating again. I do believe that at the start of the week, it is going to drop. It probably will hit this TP, but it's not ready. And you're going to see when it is ready, both these lines are going to be perfectly on this side. They're going to be red, both these lines. And it's probably going to be the first red bar down here. And that's going to be a steep trend straight down if it does drop. Did you guys understand that part? Because I want you guys to get that. We're going to keep going over more examples. Okay. So this is another 4 hour. Let's see what it looks like on the 4. I honestly, I'll tell you the truth. When they call these trades, I never look at the four. I just go straight to the 15. I'm doing it for you guys because I know maybe a lot of you are looking at the four. I personally always go to the 15 because I know that's where I'm jumping in anyway. So no point in even looking at the four. Okay, so they called a buy here right at this point. So you can see it's a small candle. So what they were looking at is a reversal, obviously. It's at the bottom. The you see a reversal candle here. So they were calling the trade and giving everyone enough time to jump in on this trade. Let's see what happened. And you guys can do this on your charts. Just mark it up. Look at the time they called the trade. Put this line in, and that way you can start to really analyze these charts. Because I always go back at the end of the week. I want to know what went wrong with the trades and what went right. And that's how you learn. So this is where they were saying to enter at this point right here for a buy. So let me see if I would have got in. Now you see my 50 is red. So it's showing me a sell. I'm not getting in here. Even though the 13 would have been showing me to get in. This is why I like to use both. The 13 is showing me, yeah, it's a good trade. Look, it's underneath. It's white. But no, this is showing me total opposite. So I'm not getting in yet. And remember, this is where they're telling you that you should jump in. I'm going to wait for the breakout of this area and the retest of it. So if this had been a good, if my 50 had been below, I still would have waited for the retest. So let's keep looking at where I probably would have gotten this trade. Right here, I probably would have got in right here. So my 50's underneath, it's white. My 13's underneath, it's white. And if you look at the bottom, this is the first bar. So I probably would have gotten right on this bar right here. Now, where would I have gotten out? Because you can see this trade didn't work out. So let's just see, I would have been up 28 pips. And I'll tell you how much I would have lost. I never took this one. Now, you see this candle. If you're looking at your chart, and you can pull this up on your phone, so you guys that are at work and you're looking at your MT4, you don't have to stare at the trade all day. Don't have your trade open looking at your charts all day. That'll drive you nuts. The only time you should look at your trading view is when you see you're in profit. Like right here, you were in profit 28 pips. So that was a good amount of profit. All of a sudden, you're going to see a steep drop because this candle came right down. So you're going to see whatever your profit was, you're going to lose like $10 or depending on your lot size, $40. You're going to see a steep drop. So that's time to look at TradingView and see what candle is on the 15. If you see a reversal candle, you really want to check out what that next candle is going to be. If you now these are the Heikin-Ashi candles. I suggest you guys use them because they'll tell you things a lot faster. I still alternate back and forth between the regular Japanese candles, but I prefer these for this reason. So I see a reversal candle. I'm not jumping out because that doesn't mean anything to me. But the next candle shows me a strong candle. It wasn't like one of these small ones. Had I seen like this little one right here, I would have thought it's going to do something like this. So I'm not jumping out. But I see this strong candle, I'm out. I'm out of the trade. Because I see that this 50 is now starting to cross, I'm out. Not only that, I look down and this bar is now red. So that's three different things telling me this trade is on a pullback. So I'm out, and I don't even know how far this thing is going to pull back. It could just pull back to right here. But again, this is what I was talking about in the beginning. Why chance it? Let's see. Let's see. We got in right here. We were up 30 or 28. Now, had we got out right here, we would have still got 8 pips. So that's fine with me. I'm totally fine with 8 pips. And then I'm going to wait for this whole move to be over because this is still a good trade in my opinion. It never hit the TP. It did a reversal. Maybe this was news. But to me, I still think, okay, there's still a chance to hit this TP. So I'm going to try to look for another entry. So as soon as the pullback is done, I want to see, okay, my 13's good. My white is crossing for a buy. It's white. and my it's the first bar, I'm getting in this thing again. So I would have jumped right in again and caught this. Well, I probably would have gotten on the second candle, honestly. So I would have caught this, but it would have done the same thing again. So I would have lost some pips. So you would have got out maybe somewhere around here, maybe for another 8 pips. Once you see that 50 crossing that red bar, or you see the reversal candles red, or you see these bars down here are red. Any of those are signs of reversal. Get out. Now, if they're all doing the same thing, if they're all showing you signs of reversal, definitely get out. Because, once in a while, this will still show me a buy, and this is showing me a reversal. So I'll kind of I'll hang out a little bit and just see what's going to happen. But when they're all showing me the same signs across, this is I see the reversal. My 50 is turning red. That's just I get out because now you don't even know if it's coming back. Does that make sense? And you can see this on your TradingView app so clearly. I've honestly never used the MT4 to look at my charts because I just can't see. It doesn't look like this. I don't know if you guys have used it yet, but when you pull up the TradingView on your phone, it looks like exactly like it looks on the desktop, which is nice and clear. That's what you want. And if you're using any type of indicators, like ones that you want on the bottom, it'll stay on the bottom. I don't know. Somebody was texting me this week. I forgot who it was. They were telling me that with the MT4, the oscillator is on the chart. That happens with a lot of chart apps. For some reason, they actually put it on the chart instead of at the bottom. Okay, so this one actually hit the first TP. Didn't hit the second. And that's the thing, guys. If some of you are going for the second TPs, two of you sent me screenshots this week. You were going for the second TP right out the box. No, I don't do that either. You have to remember with each time it hits a TP, your percentage lowers as far as will it hit the next TP because the trend is getting weaker and weaker. It's not right out the box. So you want to make sure you always take that first TP. Now it's up to you if you want to close out at that first TP. I recommend you do, especially if you're new, take your profits and then just re-enter at the next pullback. Or you can move your stop loss up, but as a lot of you see, you get stopped out. So really, really, you might as well just close out and jump back in. It'll usually be the same profit at the end of it. So this is the 4 hour buy. Let's see what it looks like on the four. It's selling, but you can see the reversal candle. That's why they were calling that buy. I want you guys to see because I know when you first start trading, I know I did this in the other company. When they would make calls and they lost, I would be furious. And I was like, what were they looking at? What did they see? So that's why that's why what I'm showing you guys what they saw. And we can't control news, so sometimes it just does what it wants to do. Okay. So this is where they called it for the buy. And this is where they were saying to enter. So you're not going to enter here because as you can see on the 15, it's dropping. It's in a reversal. What time was it? 1:15 a.m. Yeah, because it's waiting for London. So that's another thing. These trades before if they're about to do a big trend move like a big buy or a big sell, they're usually going to wait for London open. So they're going to wait for usually you're going to see that move start to happen between 2 and 3 a.m. So if you see them put out a trade for like a 100 pip move, expect it to consolidate up until about 2 a.m. if they put it out like right before because that's usually when it'll take off, is it right around that time. So I'm looking for a good place to buy. So now here's a reversal. I'm not getting in here because if they're giving this recommendation as an entry, you want to use it. Don't jump in here. I mean, you can and try to write it up to their entry, but it's taking a chance and that we're not in this to gamble. So the reason they gave this entry, I want to see. Yeah, it's a good zone. See, we went over this last week. Well, I know I showed Sarah this. If you switch to the line chart, you can see exactly why they gave this as entry. You see how it's always stopping right here. So unless it passes this point, this isn't a good trade. And that's why they were giving that specific entry. Hold on, let me go back. So right here it does pass. Now, a lot of you would have jumped in right here. Everything's perfect. The 50's underneath, the 13's underneath. Does anybody know why I wouldn't have jumped in right here? Yes, it's too far along. So I'm way past, and now you guys can see what I'm saying. When you pass that third bar, you're pretty much coming up to the end of that trend. So I wouldn't have jumped in here. The second reason I wouldn't have jumped in is it didn't come back and retest this line. You guys saw when I did the line chart right now how many times this thing came up, came back down, came up. So this is like a wall, this little area right here. So whenever you get a strong support or resistance zone like that, where price keeps coming to it and stopping and going back the other way, it needs to retest that area. If it doesn't come back and retest that area, it's usually a fake out. That's the market makers wanting you to think that it's a buy, taking off, and then as soon as you're in that trade, they're going to reverse it hard on you and take all your money. So you always want us to come back, retest whatever that strong zone was, and then take off. So let's see where it keeps going. I wouldn't have got in here. You see at my 50's white, the 13, but you have a red bar down here. So I wouldn't have got in there either. So we're going to keep going. And if you're looking at this, I mean, we're going over it pretty quickly. This is 1 day, 2 days. It took 2 days for this thing to take off. And that's the thing I want you guys to understand about these 4 hour chart trades. They do take a long time sometimes to actually take off. But if you're looking at the 15-minute, you won't get stuck in these trades for days because you'll know, okay, this is, and you can just mark your chart like I just did. Whenever you go home or if you are home, just put this little bar right here. So every time you're at work or wherever you are, you can just jump onto this trade and take a look and say, okay, is it getting ready? Like, does it look like maybe today is going to be the day it takes off? And it might be. So 2 days later, this thing finally took off. So I would have jumped in right here and I'll show you why. Okay, let's see. I don't think I would have jumped in right there actually. Well, maybe I would have because of the white bar, but I probably would have got in here. So it's underneath, it's white. My 13's white, it's also underneath, that's fine. It came back and it retested. That's what I wanted it to do the first time that it didn't do. And then here we have the reversal candle showing you that it is a good buy. And now I'm just waiting for that white candle. I know they're small. Hold on, let me make that bigger. Okay. Where was it? Okay. So now I'm waiting. I'm not going to get in here either because it's still a red bar. And sometimes I've jumped in on these and then it turned on me. And the next candle was red and that was warning me. So I'm waiting for that white bar. So I'm going to get in on this one. Some of you will be in a rush and you'll get in early because you want to catch that extra 2 or 3 pips, and that's fine. You can do that. But just know it's risky because this next candle could end up being red. So you always want to just confirm with this bar down here that it's white and it's above that zero line. And if you don't know what I'm talking about, send me a message for that training after so you can watch it. And this one took off. And how much did it get? It took you got um God. It just slipped my mind. The yes, the accelerator. Excel. Yeah, I'm like, God, I don't know. Good question. That might help you guys. I'll write it out and send it to you because it's such a long name, the whole thing. Yes. And then when you see it on here, they just write AC. So is that ever like I can just show you? See, that's what it is. It just says AC. But I can send it to you. So this took off. Now they had two TPs for this one, but you would have just took your pips probably till about here. When you saw this reversal candle again, that's a good thing about the Hakanashi candles. The reversal candle is so clear. Whenever you see that candle, pay attention because it's reversing. Now, it might just be like a little small reversal, but it is reversing. So always pay attention. And if you see that 50 about to cross a candle right next to it, then that's it. You're good. Take your pips and get out of the trade. So you could have actually took this past the TP to right about here, is probably where you would have got out. So you would have got a few more, or you would have just took the TP, which was fine. Okay, this was a buy too. I don't remember what happened with this one. This one did hit. But again, all right. So look at how long this took to hit TP. 1 day, 2 day, 3 days. Exactly 3 days. So again, for those of you asking me like, should you hold on to trades? If you got in here, you would be holding all this time, especially if you were in drawdown, a big drawdown. You're holding this thing. If you don't want to really lose a big amount, then yeah, so look at you're in this thing for 3 days and you're missing out on all these other trades that are coming out because you're probably maxed out on your margin. So that's why a lot of you'll send me stuff like, oh, I'm seeing they're posting like, oh, 110 pips hit. I missed that one. You couldn't get in because you were margined out. So if you're entering, that's why entries, they're so, so, so important. If you're entering at the right times, you're not getting caught in any of this. You're getting in at the right times. Now you still might get caught. I'm not saying I just got caught this week. I told you guys that. You still might get caught once in a while, but you won't get caught as often. Maybe one trade once in a while. Hmm. And you notice a big difference, right? Once you started doing that? Yeah, and Sarah, you were talking about wanting to use larger lot sizes. So for you, that's important too. So you can go with those larger lot sizes. Just make sure you're looking at that margin level percentage. Once you get to that 500 point, you can't open any other positions because now it becomes a risky trade, where you won't be able to hold a pullback. Like let's say you're in this, you had jumped in here, you might not be able, well, let's say you jumped in right here. You might not be able to hold this type of a pullback if you had too many positions open and you were at like let's say 200 margin, which I know I've done it. Everyone's pretty much done that when they first start. Oh, okay, so this was a buy. Go ahead. No, no, go ahead. Okay. Ah, we're losing you, Sarah. We lost her. That sounded like it was going to be a good question. Right? She built it up. I wanted to hear it. Yes. All right. There you go. What is it? Go ahead. Oh no, I can't hear you. Okay, now I can hear you. Go ahead. Yeah, you could have. You know what? Especially if you were playing safe with your leverage. Yeah, but your first question was could you have jumped in this trade and wrote it out? You could have if you were safe with your leverage. But like what you said at the end, you don't want to do that because that whole amount of time where you're sitting here for 3 days, you could have been, you now you see, yeah, that's the whole thing too. And usually when it's taking that long, it's already not doing what it was supposed to do. So that's the way I see it. If it's taking that long, it's already doing something different. And you're if you look at a lot of they gave out a lot of trades this week. Some of the trades hit within 30 minutes. Like I think they would post it and literally it was like, okay, it just hit TP1. And that's those are the trades you're missing. And it's not to have FOMO because that's not what I want you guys to start thinking like, oh, I'm missing out. It's not that, but I just want you to see like if you're entering better, if you have better entries, then you have the option to take another trade that might hit fast instead of yes, yes. Yeah, I forget which one that was. I was in that one. Was that EuroCAD? No, no, it wasn't EuroCAD. No, I know exactly what you're talking about though, because I was in that one. And it no, that was actually I think it was Geode. Yeah, I'm pretty sure. Yeah, some and again, this has a lot to do with the strategy they're using. A lot of them have multiple strategies they use, and sometimes if they see a setup, they'll call that specific setup. And like me personally, I have like two or three strategies. Some I know if I was to put it in the group, by the time you guys saw it, it probably already hit TP. And then there's others that would be like this. They might take 2 or 3 days before I really see a good entry on them, but I see what's coming. So it could have been just one of those types of setups where they knew it was about to take off. That's why they called it. So always look at the time of the trade that was called and at least mark off the entry. That's why they started. If you notice, they kind of switched that up. They weren't putting entries with the trades before, but now they are for this reason because people were jumping in after it already hit TP. So now if you see that their entry was here and you're looking at the trade, it's already, well, this was a buy. It's already up here and it's like this close to TP. I don't know if I would get in here. It's way too close to TP. I'm going to wait. If there's a second TP, I'm going to wait for it to hit TP1, wait for a pullback and get in for the second TP because you already pretty much missed this entire move. So let's see. This was a buy. I wouldn't have got in here. No, actually, I would have got in right here. Yeah, I would have got in right here and caught these pips. Let's see how many I would have caught. 17, but I would have lost some because I would have got out on this candle here. So I probably would have broke even on this honestly because I always wait for the second candle. I don't just go by the first. But you see this bar right here? The minute I would have seen it flipped to the downside, I'm out. So I would have lost somewhere. I would have jumped out somewhere in between this candle because remember it would have still been actually just forming. So it wouldn't have been this big, but I would have got out right here. And I would have waited. What I do with these trades, just so you know, I mark them up when they call them. I save my chart. And every few hours or every day I'll just come back and take a look and see what it's doing. Because if they called it, it's going to be a good trade. It'll play out. Maybe they just called it really early or maybe news happened to hit. But like I told you guys, the thing with news is even if it reverses, it will come back. It will come back even if it takes 2 or 3 days. It'll come back and hit the direction it was supposed to hit. So that was the thing with a lot of the pairs this week. So let's just go over here. I probably would have gotten some more over here, but I'm not going to go over all those because we already kind of went over that stuff. So where would I have gotten here? So this was their entry, not here. Not here because you see my 50 still red. And you guys, you can do this, or if it just confuses you to have the two colors, just make it one color. So now I'm starting to look because my 50's underneath, it's white. So I'm looking for a good entry. Mm. See, I probably would have wanted to get in right here, but I would have said I'm going to get in on the second candle, and then I would have saw this, which is a reversal, so I wouldn't have got in because I need to see another strong candle right after. So I probably would have got in, nope, because it's too far along my bars. I probably would have got in right here. And so for some of you, this is missing a majority of the move. So you're thinking you missed out on 8 pips or 4 pips. I don't think about those kinds of things. I want the best entry possible. I don't really care if I'm missing 5 pips or 6, because for me, it's not the pips I'm missing, it's the risk that I'm losing. So this whole area right here was risky for me. This is not. This is more of a short thing for me. Yeah, everything lined up pretty well. It came back and retested. You really could have got in here. This would have been just no risk right here. Came back, retested this white line, and it's the 50 and it's off. But I probably would have got it right here, honestly, and took that all the way to the TP. So it would have been 30. If you're more risky, you would have gotten down here and got it for 46. So either way, it's still good. Now, for those of you that like to go past the TP, how do you know when to get out? The same thing, you're looking at that. If you're using these candles, it's going to be so clear to you. You're going to see that red candle so clear as day. Even if you're using a different color, it's going to be automatic. It's going to be the reversal candle, and you're going to see the color switch. As soon as you see that with these types of candles, it's a warning to get out. And then you see the 50 again crossing. So you can always, like I said, take your TP, get out, wait for this. If it's going to come back up to go to TP2, you can do that and jump right in right here. You want this to break out of this zone, come back and retest it before you get in for TP2. Because it could just break out of this zone and fake you out and drop again. So you want it to come back, retest before you go for a second TP. All right, we're going to do one more of these. Go ahead. I didn't pull that one up, but I'll pull it up. I'll do that one. Did you guys lose that one? Was it in profit? I didn't take that one. I'll pull it up. You were in drawdown for a day? Okay. I'm gonna pull that one up. EUR JPY or USD JPY? EUR? Okay, wait, because you guys are giving me two. Was that the one you were all in? USD JPY? Let's see. September 25th. What time was that? 11:27 a.m. Some no 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 no, but some of them. That's the thing. Because some of them do take right off. You never you have to you have to really see if it's trending. Where is that TP? Where'd I put it? Oh, okay. No, no, I had this marked up. Apparently, I must have been trading it on my own strategy because these are all different TPs. That's what I'm trying to get rid of my own TPs. Yeah, this is the one I meant to put. Okay. 106.70. So this was their TP. So wait, this trade never hit TP, so you guys just got profit and you jumped out of it. Okay, yeah, because I yes. Hoping and praying together. Here, so this all right, so this is a 4 hour. They called it on the 4 hour. This is a buy. It's showing a buy. They called a sell. I'm just looking at it to try to see what they saw. So they saw this dropping. I don't know why they called it right here. I probably would have called this as a sell anywhere in this area. I wouldn't have called it here personally. Only because, yeah, I wouldn't have called it in this area only because of this strong candle here. The candles were getting stronger. So I don't know. I don't know if they were waiting for it to reach a certain point here and drop back down. But let's look at the 15. Yeah, that's the 25th. That's the 25th. Yeah, I took off my daily lines because it can get confusing. But I'll put it back so you guys can see them. Yeah, so we're back over here. So they called it here. They called the sell there. So on the 15, now I see what they saw. They saw that it had reached a peak formation. So for them, it was going to just drop. It didn't. It didn't do that. It started dropping and then instead it reversed, and you have actually a V formation. For those of you that aren't sure, maybe you've heard it before. V formations are patterns that the market makers use to basically screw you. There's no other way to put it. Whenever you see a V formation, it happens so fast. Now, I wasn't in this, but now because I see this formation, I know that whoever was in this trade, it was going lovely. And then all of a sudden, next thing they knew, they were in big drawdown. Because the only time you, yeah, because when you're looking at the thing with V formations is don't bother looking on your chart and trying to find them and saying, "Oh, there's a V, so I'm not going to jump in." When there's a V formation, you don't see it. They happen so fast that you don't see it until it's already done. And I know this from trading US 30. They do a lot of V's in US 30. So it'll be going down, 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 and then all of a sudden it's just right up. They usually just pump the candles really quickly, so it'll jump like 50 to 100 pips sometimes within a matter of minutes. And then when you look back, you're like, "Oh, look, there's the V formation." But that's they only do that. So I want you guys to understand like what the market makers are thinking, what's happening behind the scenes, because the more you start to understand this stuff, the more you'll understand what's happening on the charts. So whenever you see a V formation, what happened with the market makers is they saw that a lot of people had sell orders in. So they when they looked at they're looking at they have their own balance sheets that they can see, okay, there's whatever, a trillion orders out for sells right now, and there's only like 100,000 for buys. So it would make sense to clear the board on the sells. So how do you clear the board? You do a sharp move to the top. You take out all these stops because everybody's stops were probably right here, right here, right here, and right here. So they took it out all the way. You see, they came up just enough to take out all these stops. And then they started to come down again because they know for the people that didn't have stops in, which would be someone like me, if I got caught in this, um, they're like, okay, so the people that didn't have stops are going to hold on to see if they can get their money back, recoup. So we're going to bring it down some more. So now a trader that didn't have stops in, or maybe they had their stops a little further back, they're like, all right, so we're still good. Now it's dropping again, and boom, they hit you again, and they clear the board again. So that's all this was. That's all this was. So I and never hit CP. So no, here's the thing. So this move will still happen this week because this trade, I don't know what they saw, what pattern they saw, but I can guarantee you this move will still happen because this whole move was a fake out. So this move will still happen. I can, what I It's them clearing the board. That's the best way to look at it. It's they saw a lot of money to be had and they went and got it. And they just cleared out, they wiped out the whole board and now they're starting from scratch. So what I would do with this right here, I'd personally probably just draw a trend line right here and I'm gonna wait for it to break this trend line. And then I'm looking for that entry still with the same entry they gave because I can almost guarantee this is still a good trade. So if you guys just want to monitor it, I wouldn't say personally jump in again. Here's my own rule for my own trading. It's in my trading plan. If I lose a lot of money on a pair or I'm in drawdown on a pair for whatever it is for me, maybe 4 hours annoys me. So if I'm in 4 hours in drawdown, I completely walk away from that pair for the entire week. What I used to do when I started trading is I had this like revenge that I had to get with that pair. And I was like, oh, USD JPY lost me 50. I'm gonna get back 100 from USD. It's like it was a person that went into my bank account and stole money. So I would spend the rest of the week analyzing this pair because I was determined to get the money back from this pair. And what I did every time was I lost even more money to that pair. So that's my rule. If I struggle with that pair that week, it's off my board. I don't care who calls a trade on it. I'm not touching it. Because you're usually in like a revenge mindset and like everything we're going over right now of when to jump out, you'll totally ignore those rules when you're in a revenge mindset. Yes. So you're not even. Yes. Yes, and I did this for such a long time until finally I made it one of my rules. Because remember, I told you guys, write down every time you make a mistake or you have a loss, figure out the reason and write it down. When I looked at my trading journal at one point, I saw that constantly, that I kept going in for these revenge trades. And I was like, hello, dummy, that's a major problem for you. Stop doing it. So. So yeah, I don't do it anymore. It just so I personally wouldn't I would maybe mark it up just to see like okay, did it still go hit the TP, but I wouldn't trade it for the rest of the week. Well, it's fine if you're on demo. But I like to look at I really do, especially when I started trading, I convinced myself that demo was real. Demo was not demo. I treated demo like it was real money. I didn't get upset when I had a loss because, again, that's what you're trying to teach yourself not to do, is to get upset. You have to manage your emotions. I didn't get happy when I had a 110 pip gain. I kind of always stood even, but I treated it just the same because I wanted to make sure that whatever habits I was creating, I continued them with the live account. Yeah. Yeah, that's very true. You're starting to detach from the trade. The trade is not you. That's good. I want to go over this last one specifically because I know your dad had asked me some questions about it. So this was in as a sell. I hope a lot of you caught this one. I rode this bad boy all week. So yeah. So this is a sell. They call this on the 4 hour. I don't know what it looked like on the 4 hour because I didn't get in on a 4 hour. Let's see. Okay, so it was a sell candle, and me personally, if I had called this on a 4 hour, I would have called it for this right here. It broke this trend line, but I don't know what they were looking at. Okay, so, huh? Yeah, this was a good one, and it didn't really reverse too often, which was nice. It was like a steady just decline the whole time. So, okay, they called it here, right here. So it's a buy. It started to reverse right here. This is where they were saying to enter. As you can see, definitely not entering there. Well, okay, so I don't know what happened. They must have called it and it jumped, or I don't know. They called it right here, but you can see it was past the point they said to enter. So maybe some of you jumped in and caught this quick TP. I didn't because I was waiting. I saw it had already passed. So that already hit TP1. So I didn't get until over here. You can see my 50s on the right side, it's red, my 13s on the right side, and it's perfect. It's the first candle to the bottom side. So I jumped in right here, very top, TP1. I rode this one the whole way out because it wasn't really showing me anything crazy. I would have gotten out if I was right here. If I was you guys, I analyzed this pair. I had been watching it for a while, so this is why I really didn't jump out. But for you guys, I would have probably got out right here and then jumped right back in after the TP. So remember, we said if it hits a TP, you want to wait for it to come back and retest that TP. So that candle, if you guys can see it, I know it's kind of small, but it's retesting that TP. So you would have got in right here, and the bottom bar is red, so you're good to go for TP2. And it would have consolidated just a bit, but as you can see, if you would have got in right here, even if it's consolidating, it's only going back like 7, 8 pips, so you were never in big drawdown here, and then it would have dropped here. This is what your father was asking me, is it going to continue dropping? And I told him it's going to drop for a while. Stay in it. And it dropped all the way down here. This is I believe it was 100 and something pips or more. Oh, it, yeah, they only called the TP. They only did two TPs, so their TPs went to 100. I'm not sure how much your dad caught on it. I was telling him to stay in, but yeah, I caught the whole move for it. It was about 200 and something pip move. So this is the stuff I was explaining to you guys. So if you're catching these, just if you took this to the second TP, that was 100 pips, three positions. This, let's just say you took no other trades all week, three positions on 100 pips, that's 300 pips. Now, if you're doing that 0.10 dollar a pip, that's $300 on one trade. And eventually you guys will be doing way higher lot sizes as you get bigger and bigger accounts. But you don't need to take a million trades. So what you can do is, since you guys are still new, a lot of you, you're still trying to figure out what trades are good, what trades are bad. Take all the, have a separate demo, because I know some of you are just trading on demo and you're treating it like your real account. Have a separate demo where you just punch in whatever trade, whenever it's dropped. They're saying geod is a sell. Okay, just go to this pair and just type in sell. Don't even put in the TP. Don't even put in the entry price. Just whatever they're saying, sell or buy, and do that for every single pair. Whenever you see a pair go into profit, go and look at your charts and see, okay, this looks like a good pair. This actually looks like a good, it's forming nice, it's flowing nice. I think I'm going to open up two or three positions on this one. And doing that, I did that a lot when I first started learning, because I remember the other company constantly they would call out like 40 trades a day. And it was like 50-50. Half would win and half would lose. So I started doing that, just like opening every single trade on demo. And I would only look at the ones that went into profit. I wouldn't even waste my time. Like, because if you sit back and analyze all these pairs, a lot of you that are busy and working and owning businesses, that's just too much. So just analyze the ones that go into profit. And that's something you can do in the beginning. Yes. Yes. Yeah. Yeah, because sometimes you'll see on demo, you'll jump in and it'll be in profit right away. And then in 5 minutes it's not. It's in drawdown. And you're like, "Oh, thank God I didn't get in that one." you know? And then you'll see like for the next 5 hours, it continues to stay in drawdown. So you're like, "Oh, thank God." So, you can I remember I went to this advanced trading workshop when I first started, and that was one of the tips that the it was a girl teaching at that time. She told me, she was like, you want a huge tip, $1 million tip. She's like, open every trade on demo first. She's like, see how it's acting and then take it on your live account. Yes. Yeah, some of the pairs went crazy. Yeah, that was the one you were considering going live with, right? Yes. Yes. Yeah. Yeah. Yeah, that's what it was. And then you said that in the morning, like, oh, thank God I didn't get in. So this is gonna help you guys. And I recorded this, rewatch it. I mean, you don't have to listen to the whole thing. Just fast forward to the parts where we're specifically going over these lines. Again, this is the 50. This is my MTFA 50, and this is what the settings look like. I just have the white or whatever color you want to use for your buy and your sell, and then I have it 50 over here. If you don't, if you specifically like, I like my MTFA lines. David uses his EMAs and loves them. So just try both and see whichever one you like and feel more comfortable with. So if you want to use just one color, that's what it would look like, and that's fine too. And remember what we went over last week for any of you that weren't on, finding those points. If you're starting to try to mark up your own charts, get rid of all the lines on your chart, any indicators, any EMAs, and you want to just find those points where you have a tap on the top and a tap on the bottom, and those are going to be good points for TPs. Look, this was the TP they called, and you can see. right there. This is another TP they called. I guarantee you there's going to be a tap. It's right there. Tap on the top, tap on the bottom. Those are always going to be strong points for TPs. It'll always stop there. Okay, so you're going to click on, make sure it's an empty spot on your trading view. Go to settings and go to appearance, and it's going to be session breaks. And you can make it, you just check it once you check it, and you can do like a full line if you like. I like the spotted lines. It's just not too much, so it's kind of there but not really. And that's per day, so this is going to be midnight every time you see this. No, actually it's not midnight. I changed it. What time is it? 5 o'clock. So this is right at the end of the trading day. I yours might be midnight because I had changed mine. I don't know if they start it now at 5, but I know I've had TradingView for a while, so they've done a lot of changes. But in the beginning, when I first got TradingView, this used to be this line would be at midnight, so you had to go in and change that. But I don't see that option anymore, so it might just be 5 o'clock because there used to be an option here for the time you want the line. But so it's 5 o'clock, so it'll be the end of every day. And remember, I was saying I do that because at the beginning of every day, after 5 o'clock, it's always consolidation for the most part. So you don't want to be jumping in trades at that time. See, consolidation, consolidation. It's always consolidation for the first few hours. Okay, so um, wait, did you guys have any questions? Because I wanted to give you guys an exercise for mindset because I think it's so, so important. I wasn't focused on it when I first started trading, but once I started focusing on it, my trading took off completely. So it's going to be so important for you to manage your emotions. If not, you're going to be a mess. You're going to be upset 1 minute and then happy the next because you just got 110 pips, and then you're back to depressed because you lost 110 pips, and until you learn to manage your emotions, you'll here you go. Sorry. You won't be able to see the charts clearly because your emotions take over, and you won't see things the way you see it when you're not emotional. So, did you guys have questions before I give you guys something to do for mindset? Good. Yes. Yes. I start my day with one all the time. So, negative words. You guys, I know I'm guilty of it. I went to a retreat and had to do this exercise, and I didn't even realize I was doing this kind of stuff. So I want you guys to think of three different words. They could be words or sentences that you say to yourself all the time, and you don't even realize it. Like when I had to do this exercise at a retreat, I was like, oh, I don't really use negative words like that. I've been doing this personal development thing for over 10 years. I'm pretty like if I catch myself immediately. But as I sat down, I was like, no, they're still there. There they are. So you have to just sit down and really think, and you'll do this as you go throughout your day. So just catch yourself, like, are you sitting there and you're not getting, maybe a trade went wrong and you're like, oh my God, I'm so stupid. And then if you catch yourself like, wait, how often do I say that? And you'll probably realize that you say that often throughout the day for many things. Like maybe if you're late to pick up the kid or you spill something on yourself, it's a constant I'm so stupid. And saying that over and over, what's going to happen is you're going to keep attracting things that make you stupid, that make you feel stupid. You're going to keep confirming to yourself that you are stupid. So yeah, I want you to change those words. Figure out three different things that you say to yourself and reword it so that every time you catch yourself saying something like I'm so stupid, just reword it with I am the smartest person I know. And you have to repeat it. And that's the only way you're going to change that pattern of saying that. So every time you say I'm so stupid, you have to say out loud whatever the word is that you're changing or the sentences that you're changing. Now, the first week, you're probably going to be like I was when I did this exercises or at a retreat. I was like shocked at the amount of negative stuff I said to myself. I'm like, I didn't even realize I'm always saying these things because it was such a habit. But once you realize, and just do three, because there'll probably be more, but just go for three, because yeah, go for three, because it's a slow shift. You don't want to like to have to change your whole vocabulary right now. That's just too much. And I want you guys to find one thing specifically related to trading. We all do it. There's going to be something you say, there's not enough hours in the day to learn this thing. I'm never going to learn how to read these charts. Trading is too hard. Why is everybody else winning and not me? All these types of things. If you're saying any of them, just pick one and you're going to reword that to there are so many hours in the day that sometimes I don't even know what to do with them. And you're going to for that, you're just going to put up a sign in front of you. If it like it could be on a post-it note, it could be in your phone, so every time you turn your phone on, you're going to see that saying, because I want you to start rewording that, because that could be a major block to your trading and you don't even realize it. Okay? And I'm gonna email you. I'm gonna email that to you guys so you can remember it. Yeah, I'm gonna email it to you guys too, because it's major, and I've personally done that myself, because for me a major block, especially when I started, was there isn't enough time in the day to learn this stuff. It's just too much. And then, I was like dropping my daughter off at daycare at 6 a.m. and I was just like, I just felt like it was just too much. I was too stressed out. But once I started looking at it different, like, wait a minute, there is enough time in the day. I'm just not scheduling my day properly. And yeah, there, I know David. Yeah, David started doing this. And when you start to reframe how you're looking at it, the resistance stops, because that's resistance against learning. So you're wondering why is it such a hard process to learn, because you're saying all these things. So you're making it hard. It changed everything. Wow. Yeah, no, I saw that schedule of yours. It looks good. But that's what I'm talking. You guys will see a huge shift. Give it like 2 weeks of doing this, and you're gonna see a huge shift in both your trading and just other things in your life once you start realizing the negative stuff you guys are saying to yourselves. Yeah, we all do. I still do it. I catch myself on different things all the time. Yeah. And it's crazy how when you come to when after you guys do this exercise, you're gonna really realize like, wow, have I been beating myself up this long? Because I never noticed. I really never noticed that I did that kind of stuff. So let me know, like send me private messages. So I know that's something you might not want to write in the group, but send me private messages on how it's going for you, the exercises. Okay? All right, guys, I'm gonna wrap this up so that hopefully I got the whole recording, the whole 2 hours. Yeah. Yeah, that's why I'm like I should probably stop recording so it actually can go through. But all right, so if you guys have any questions, just let me know throughout the week. Just send me a private message and especially about lot sizes, please, 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 especially if you're trading live, send me your screenshot so I can tell you recommend some lot sizes for this week. Okay? No problem. No problem. All right, guys. You're welcome.